Hey traders, welcome back to the channel. If you have ever felt lost in the world of candlestick patterns, you are not alone. Today we are going to cut through all the noise and talk about the 3 most powerful candle types you need to master. By the end of this video, you will not only understand the psychology behind each candle, but also be able to make faster, more confident decisions in your trades. So make sure you stay till the end. Trust me, this will be a game changer for you. Let's start by addressing the first big question. What do you trade into and when? In the trading, this when is crucial, and this is where candlestick patterns comes in. Now, if you have been trading for any length of time, you have probably heard of patterns like the star, engulfing, hammer, hanging man, and others. But here's the problem. Knowing 50 different candlestick patterns isn't going to help you judge the next price move effectively. A candlestick is like a mini story telling us what's happening in the market just a few seconds. But let's be honest, a picture is worth 1,000 words, and in the case of candlesticks, these pictures can speak volumes. So today, I'm going to simplify everything for you by breaking down the 3 most important candlestick formations that cover all the crucial concepts you need to know. These are the foundations. Once you understand them, you will feel far more confident in your trade, whether you are a beginner or seasoned trader. Before we dive into the 3 main candle types, let's quickly break down what makes up a candlestick. A candle consists of 2 parts, the body and the shadow, also known as wicks. The body represents the opening and closing prices of the period, while the shadows represent the highest and the lowest prices. So, the shadows tells us where the prices has been within the time frame, and the body tells us where it ended. Now, this is where things get interesting. The bulls create the lower shadow by pushing the price up from the low, and the bears create the up shadows by pushing the prices down from the high. It's like a tug of war, and the direction they push in tells us a lot about the market sentiment. Alright, let's get to the good stuff. There are 3 main types of candles you need to know, and I'm going to break them down for you in a way that will make you see the market in a whole new light. First up, the mini candle. Think of this as a Lilliput candle, a tiny little candle where the opening and the closing prices are very close to each other. The price difference is much smaller than the previous candle. It's like the bulls and the bears are locked in the battle, but neither side is really winning. This is a candle of indecision. When you see this, you can expect the market to pause and wait for the next big move. It's like a timeout in the game. So what does this mean for your trade? Well, if you are in a trade and you see a mini candle, hold off. It's a sign the market is undecided and you should wait for more confirmation before pulling the trigger. The second one is a large candle. When you see a big candle, pay attention. This is your signal that something significant is happening. It could be a breakout, a reversal, the end of a current period, or the start of a new trend. It's one of those grab your attention moments, my friends. When this candle forms, it often means that there's high probability the market will move further in the direction of that large candle. But here's the thing, you need to be very quick. If the large candle is in your favor, this is the moment to pull the trigger on your trade. If it's against you, it's time to cut your losses and rethink your strategy. Remember, a large candle doesn't just indicate strength, it also indicates that something significant has changed in the market. The third type is reversal candles. These are powerful candles and show us a strong bias towards one direction. These candles can sometimes look ordinary, but it's in the shadow where the mystery lies. So let's break it down. A long bottom shadow means that bulls stepped in to push the prices up after a pullback. Even if the body is red, this is still bullish because the prices were rejected at lower levels. Sellers were trapped at those lower levels and the bulls have taken control. A long bottom shadow with a small green body, that's super bullish, my friends. On the other hand, a long top shadow means the bears took control and pushed the prices down after trying to go higher. This shows rejection at the top, which is a bearish sign. A long top shadow means the bears are in control and it's a signal that the market is likely to move lower. This is super bearish, my friends. The key takeaway here is simple. Long bottom shadow is equal to bullish, a long top shadow is equal to bearish. Now that you understand the 3 types of candles, let's talk about how to read them accurately. Here are some key tips that will make you a better trader right away. Wait for the candle to fully form. Always wait for the candle to close before making any interpretations. The market can shift quickly and initial appearances can be misleading. Before looking for a reversal, make sure there is a clear trend in place. Reversal candles at significant price levels hold more weight. Candles on higher time frames like the daily or 15-minute charts are more reliable because there is more market participation and emotional investment. Don't trade just because a pattern appears. Make sure you have a solid reason and filters to back your trade. Patience pays off. Candlestick patterns often need confirmation before acting. Never chase a trade. Wait for that extra signal that confirms your analysis. Key moving averages like 20 MA, 50 MA, and 200 MA are great levels to watch for reversal or support resistance. Pay attention to patterns near these lines for more reliability. Lastly, timing is everything. Knowing when the market is most active can make a huge difference in your trading. There are 4 key market zones: 9 AM to 9:15 AM pre-market participation. Gather your data and plan your strategy before the market opens. After that, the second time zone is 9:15 AM to 10:30 AM. We can expect big moves influenced by overnight news and trends. The third range, 10:30 AM to 1:30 PM. It is quieter period with less volatility, and there are great chances for consolidation or waiting for the next big move. And the last one is 1:30 PM to 3:30 PM. This is the final push of the day. Moves made here often define the day's trend and closing levels. Patterns that form during these times have more conviction, so be ready to act quickly. So there you have it, traders. These 3 types of candles, mini, large, reversal, are all you really need to focus on. Combine these with the tips we discussed and you will be able to make quicker, more informed decisions. Remember, trading is about quality, not quantity. So focus on the right setups and stay patient. In the next video, we will learn how to use these candles for making profits. If you found this video helpful, smash that like button, subscribe for more in-depth trading tips, and drop a comment below for your favorite candle pattern. Until next time, trade smart, trade confidently.